All right, how's it going, everyone? Today I'm going to be going over our brand new indicator, Market Mind. All right, this is our own smart money concepts indicator that we've released entirely free to the Easy Trades community. There's no catch or any of that involved. We're literally releasing the entire source code. So this is going to be yours literally forever. This works across any asset on any time frame. Now, for those of you that already trade smart money concepts or ICT concepts, this is going to save you so much time trying to find those key levels, trying to find those imbalances, order blocks. You know, whatever confluences that you use in your trading strategy, there's a very high chance that we have those integrated with the Market Mind indicator. So first off, if you want this indicator for yourself, join the free Discord. All right, there's going to be a link in the description to join the free Discord. Once you're inside of the free Discord, there's going to be a channel called Market Mind. All right, so go to that channel. It's going to take you to our website. All you have to do is input your email. Once we collect your email, we're going to send you guys the source code as well as an installation guide and a beginner guide. So if you don't already know how to trade using smart money concepts or using the confluences that we have integrated into this indicator, you can literally learn it just from reading our beginner guide. We go pretty in depth into, exactly what each input is and how to use to the best of its capability. But I'm assuming most of you guys probably already know the basic stuff that we have in this indicator, like market structure, order blocks, imbalances, trend lines, pretty basic stuff. But I'm going to run through everything here in this video and just give you guys a better idea of what we actually have included, because we do have some pretty cool stuff that I haven't seen integrated into too many indicators yet. So let's jump into the settings real quick. Now, by the time you're watching this video, there will be another update, so it might look slightly different. There's a few glitches that we're trying to hammer out in the next update here pretty soon. But let us go into the settings, right? So I just reset the settings to default, and we're gonna go one by one talking about the inputs, all right? So first, we have the order blocks with a multi-time frame toggle as well. Now, a lot of order block indicators are pretty ugly, right? You have these huge order blocks covering a majority of your screen. In fact, I'll actually show you guys what they look like. If we go down to the internal bull bear, if we turn on these zones, showing you the actual volume that makes up these order blocks. However, I don't totally find that useful myself. And I think it looks pretty ugly on the chart. So what I like to do is turn the order blocks to lines. Now, this is something I haven't really seen before, but you can immediately tell, right? Your chart is so much cleaner. You know there's an order block right here, right? You know there's an order block right here, but it doesn't take up so much space on your chart with this big ugly block. We want to make sure your chart is as clean as possible so your trades are as clean as possible, right? If you have too much shit going on in your chart, it can make it very difficult to find trade ideas, find a thesis, and then execute properly. So if you have it as a sleek line, this makes it a lot easier on your eyes and makes it a lot easier to find other confluences as well, which we're going to jump right into. Now, we do have a multi-time frame toggle if you want the multi-time frame order blocks. Personally, I don't use this. I'll just use the time frame that I'm on. But if you want to go to, let's say, the 1 hour time frame and trade with some higher time frame order blocks, you can definitely do that. Right, so if I turn on the multi-time frame order blocks, all right, boom. Now we see we have a 4 hour order block right here, right? So I can see that we have one right here. So, if I want to enter maybe on like a 1 hour time frame, obviously this line is not going to change because it's set to the 4 hour. So that line is going to be the same on every time frame. So right off the bat, I can tell that this is going to be an area that I want to take a long position here on Bitcoin. And I'll explain why in just 1 second when we jump into the other confluences. Very, very clean. We do have a lot of customization as well. For example, the mitigation method, that is when an order block is now invalid, right? So for me, I trade the average of the order block. So once price tags into the 50% level of the order block, to me, that's an invalid order block. I can't use that again, right? Some people, it's different. Some people that want to wait for, a touch. As soon as it touches the order block, it's now invalid. Some wait for a wick all the way through the order block, and some wait for a candle close below the order block. Now, personally, like I said, I keep it on average. The 50% level is kind of like the sweet spot, in my opinion. And then, of course, you can change how many order blocks you want on your screen, the text size if you're using the zones, the midline, that sort of thing, right? So just pretty basic customization. I really wouldn't worry about customizing this too much. Again, the whole goal of this indicator is to give you guys everything you need to have on your chart without making it super confusing, without making your chart cluttered. So we really want to remove the noise as opposed to making more noise. So I wouldn't really mess around with the settings too much, but if you want to customize it a bit, you can. All right, moving down to market structure, right? So we have the internal and the external market structure. Now, personally, right, from experience, I trade external market structures. So that's going to be like these external swing points, right? Not the internal structures, but the external structures, right? This gives me a real good idea of what the market structure is on a slightly higher time frame. So for example, if I'm here on the 1 hour time frame, I want to turn on the external market structure to show me what kind of trend we're in. So as soon as we have this break of structure to the upside on the external, as you can see with that little plus right there, now longs are valid. So my bias is going to be long. Even when price comes down here, my bias is still long because we'd seen that external market structure shift and we haven't broken these lows yet. All right, so my bias is going to be long. Helps you guys visualize, where the market is potentially going to go in the short term. I'm assuming you guys already know about market structure. I'm not going to cover it too much. But again, we also have internal. This is something that I don't think you really need. I think you can pretty much tell on a lower time frame, when market structure is breaking. But if you can't visualize it yourself, then definitely turn on the market structure. All right, we also have equal highs and lows and swing points. So let's see if there's any equal low in this recent price action. Okay, I'll go to an equal high. All right, so this just shows liquidity, right? An equal high. Let me scroll up a little bit over here so I can show you guys better. So an equal high is when you have something like this, one high and a second high, right? That's going to be called an equal high, right? Meaning there's liquidity here, right? Liquidity. So you can expect price to push back up to these highs to take liquidity eventually. So, if price is below this equal high and other confluences are met, then you can look for longs into that equal high to take out that liquidity, right? Same thing for an equal low. Again, I'm not going to get into that too much in this video. Pretty basic concepts. You can just watch like a smart money concept full tutorial on YouTube for everything in depth. I wouldn't even really consider that smart money concepts. It probably is. But then we have swing points as well, showing you, higher highs, higher lows. Again, this is for market structure. So as you can see, we're clearly in an uptrend at this point because we're seeing higher highs, higher lows, right? Higher highs, higher lows. So when you're seeing higher highs in an uptrend, with other confluences like your displacement, like your fair value gaps, right? Breaking structure, you can expect to take a long anticipating a higher low, right? Obviously, you need to wait for confluence. You can't just long randomly, when price is at a certain level. But you can anticipate for the structure to continue the trend until you see that market structure shift with lower lows. And at that point, you can anticipate lower highs. All right, so most of you, again, are familiar with swing points. I'm not going to get into that too much in this video. But there you have it, right? Market structure. All right, below that, we have the displacement candles, right? So the displacement candles are going to be these colored candles, all right? And we're going to actually turn off, I believe the structure filter is on at the moment. So we're going to turn off the structure filter. So we're going to show you guys all of the displacement candles. The displacement candles are showing you guys displacement in the market, right? So a strong bullish or bearish move to one side. Now, along with the displacement candles, they also leave behind fair value gaps, which is something similar, but it's technically a little bit different. All right. And the way you want to play these displacement candles is, well, first of all, price will oftentimes come back up to this fair value gap to mitigate it. So, if you see a strong displacement down, you can look for longs back into that displacement candle. To rebalance the internal liquidity, it's called. So this is going to show you, internal liquidity, right? You have the external liquidity, which is, these swing points, right? These highs and lows. And then you have the internal liquidity, which are going to be, those fair value gaps and those displacement candles. Now, another way I use the displacement candles is when they break structure to the upside. For example, this is actually a very, very good example here on Bitcoin, a live example, right? You can see we've broken out of this bearish trend line, which again, we're going to get into. And you can see we have, these massive displacement candles, huge bullish candles, telling us that buyers got in here to push price higher. And that there's most likely still open orders, at this fair value gap, at this order block that needs to be filled. So what can you expect when price comes back down into this level? If it does, that is where you can expect a long position, right? So I use the displacement candles that break structure to the upside to take a long position, or vice versa, a bearish displacement candle for a short position, right? Here is another example, right? We have a bullish displacement candle immediately followed by a bearish displacement candle, right? Inverting this bullish fair value gap, breaking structure to the downside. Now I'd be looking for short positions as soon as price comes back up to rebalance this internal liquidity, right? So it comes right into this bearish displacement candle and continues down. Again, we have a bearish displacement candle, immediately gets invalidated, right? Immediately gets invalidated with candles closing above the 50% mark, and then price goes up. So that's how you can use it for, a long position. If you have a bearish displacement candle, you can look to invert that bearish displacement candle. Now, again, we're getting a little bit more in depth here into some, more complex concepts. But really how you want to use displacement is look for a displacement that breaks structure. Let me go into the settings here. I'll only toggle the displacement that breaks structure here, right? This is an example of, price breaking structure with displacement, leaving behind a fair value gap, leaving behind an order block. This is an area I'd like to take along. So if price were to come back down to this level to fill this imbalance, to rebalance this internal liquidity, tagging into this bullish displacement candle, I'd look to be taking along there, right? So this would be my long idea, stop loss below these lows, right? Something like this. And then targeting the buy side liquidity as my first take profit. So that is a trade idea live that I am willing to take. So if price comes back down to this level, I will be looking for a long position, right? Because we've broken out of that downtrend. We saw a structure break to the upside with displacement, right? Breaking structure to the upside. So this is a valid displacement candle, a valid fair value gap, right? It's also in our premium, right? So if you grab our fib, right, it's actually below our golden pocket. So sorry, discounts. This is a discounted entry. Again, these are all things I'm going to get into in a second, but this would be a live example of a trade that I would be willing to take, using the displacement candles. And that leads us into fair value gaps. A fair value gap is made up of 3 candles, right? 1, 2, and then 3. And then again, guys, right, this is another trade that I would take, right, on a slightly higher time frame. Again, we have that bullish displacement candle creating a fair value gap breaking structure. This would be a long idea that I would be willing to take, right? So it just gives you very clear levels on your chart where you can look to take trades from. And price most of the time respects these fair value gaps. And if you're looking for an entry model, you can always enter on the 50% point of that fair value gap. And we've actually added that in these settings as well. So if we go into the settings, you'll be able to see this real quick as well. If we go down to fair value gaps, you can actually show the midline, right? So this is going to be the 50% mark of your fair value gap, right? So there we go, 50% mark. If you want to set a limit or whatever your trading strategy is with fair value gaps, you can add that as well. All right, below that we have the liquidity levels. All right, pretty self-explanatory, right? We have buy side and sell side liquidity. These are our external liquidity levels. So again, if you are in a long position, let's say you're taking a long, from this fair value gap, you want to be targeting the buy side liquidity, which is going to be up here, and vice versa. If you're in a short position from here, you want to be targeting maybe sell side liquidity, right? Sell side liquidity. I'll probably show you a little bit better on a slightly lower time frame here. All right, here we go. This looks a lot better, right? So we have the buy side liquidity and the sell side liquidity, right? So if you want to take a long position, you want to be targeting the buy side liquidity. If you want to take a sell position, you can be targeting the sell side liquidity. Now, something else you can do is look for swing fails, right? So let's say price fails the sell side liquidity, right? Grabs all this liquidity and reclaims, that can be your long trigger, right? A fake out, right? So it grabs all the sell side liquidity, fakes out, reclaims these lows, and then you can target the buy side liquidity as your take profit if you want to look for a scalp trade. But again, you have to look for a clear failure and reclaim. So that would be your entry trigger. All right, below that we have the key levels, right? So the 4-hour, daily, Monday range I really like. Also the weekly, monthly, quarterly, yearly levels. These are just levels of support and resistance, and they are very well respected, especially, some of these weekly, and monthly levels are definitely well respected. I also do like trading the Monday range as well. So for example, we have the Monday mid right around here. We have that displacement candle that we talked about with that fair value gap, with that order block. This is an area of a ton of confluence. We also have this trendline confluence, right? So this is a live example right here. I'm telling you guys right now at around 69K that I'll be looking to long the shit out of Bitcoin because we have so many confluences on the market mind indicator where we have the Monday mid, we have the displacement, structure break to the upside, fair value gap, order block, trend line. This is going to be a beautiful trade idea if we get that retrace, right? And we're also in the discounted zone, right? We're in the discount zone of our dealing range, which I'm going to jump into right after this. So again, key levels, pretty self-explanatory. We also have the session levels, right? So this is mainly for Forex traders, right? London, New York, Tokyo, pretty self-explanatory. I won't go over that. And then we have the dealing range, right? So the dealing range is going to show you, your discount and premium zones. So obviously, when you're taking a long position, you want to be longing at discount, right? When price is at a discounted price, and vice versa, when you're shorting, you want to be shorting at a premium price. Now, obviously, this depends on what time frame you're trading on, right? If we go to a 3-hour time frame, you'll see that we're very deep into the premium, right? So we don't want to be taking a long on a 3-hour time frame because we're all the way at the range highs here. So ideally, we want to wait for price to come into that discount zone, maybe enter off of this fair value gap if we're trading on a 3-hour time frame. Let's say we're trading the 1-hour time frame though, obviously our dealing range is going to be a lot smaller because it's obviously based on a look back period. So this is our local range. So essentially it just shows you your local range on the time frame that you're trading on, right? So this is our local range. We have the range lows and the range highs. But ideally, we want to make sure that price is in our discounted zone, which in this case matches up perfectly with our other confluences. All right, below that, we have our point of control. All right, this shows you where a majority of the volume is in a specific look back period. Again, if we go to like a 2-hour time frame, you'll see our point of control is down here. Same with our Monday low as well, right? So again, this is another long idea. If we retrace all the way back down to here, which I doubt we will, this would be another long idea. So you can look to take positions when price is retesting that point of control. Again, this acts as like another level of support or resistance, or this can act as a value line. So let's say the point of control is right here. And hypothetically, price is below that point of control. We can look to long into that point of control, or vice versa. We can look to short into that point of control, obviously using structure and other confluences. In this case, since we're seeing displacement, price breaking structure to the upside, I don't really want to enter any shorts now, even though we are technically at the range highs on like a 4-hour time frame. Just based on structure, I am only looking for longs. And you never want to trade against structure. Just use it as another confluence, another level of importance, right? Support or resistance. And price will oftentimes gravitate towards this point of control. All right, and below that we have the trend lines, right? Last but not least, right? So this shows you, the trend line that's still valid and then the broken trend line. So a broken trend line is obviously a trend line that price closes above or below. In this case, this is a bullish breakout. So price closes above this trend line, making this trend line invalid. But instead of just longing as soon as price breaks out of the trend line, you want to either look for shorts here as a fake out, or you can look for longs on the retest, right? So right around here, as soon as we're reclaiming this level, looks like we're going to go up. That is where you enter a long. But I only use trend lines in confluence with horizontal zones. So for example here, this is a very key level of, support, right? Or should I say support, resistance, resistance, resistance. And as soon as we break out of this trend line, right, we fail this level. And as soon as we reclaim this level with bullish displacement, that would be, my long trigger, right? With my stop loss below this low, probably something like this, below that fair value gap. So that would be my long trigger. So almost a 3 risk to reward ratio at peak. This would be a trade idea using the trend line breakout because I'm using horizontal levels in confluence. You never want to trade trend lines by themselves, right? With no other confluences. Yet some traders are able to do that. I have not found success doing that. I need to see horizontal level confluence with the trend line break. But again, it just gives you another confluence as well. 1 tap, 2 tap. This was a beautiful long off of this trend line here. As you can see, it perfectly swept this low. We had our horizontal level of support here, or demand, right? Comes right into demand with that trend line confluence. Again, that would be your long idea. Stop loss below this low. That's more of a retail concept, but it's something that I personally use. And this indicator isn't just a smart money concepts indicator. It's kind of everything all in one. So all the key levels that you need to become a profitable trader are going to be available in this indicator. That is it for this video. Make sure to join the free Discord to get this indicator for yourself. Again, it's 100% free. And make sure you read through our beginner guide and also our installation guide so you can upload the source code to your trading view so it will be yours forever. If you guys could do something for me as well, since I put a lot of time into this indicator, if you could simply just like this video and subscribe to the channel and just comment something down below to show your appreciation, that would be more than enough to give back to me. So that is it. I appreciate it. You guys are awesome. I'll see you next video.